Welcome everyone to our event focused on BRSR and assurance. We are honored to have with us our Vice Chairman Sir C. Anuj Goyal ji. He is the Vice Chairman of SRSB along with our esteemed faculties and participants here today. As the Secretary of SRSB, we would like to welcome you and promoting the sustainability reporting and responsible business conduct. Today, we are honored to have this session on BRSR, and we are sure that our leader and participants, will drive this sustainability in the business community. We welcome our Vice Chairman, sir, for the welcome address. Over to you, sir.
Thank you, Sweta ji, Honorable Secretary of Sustainability Reporting Standard Board, very important board for the profession, for the society, for the nation. And I'm really very happy that we are having this very important VCM today. We are having the presence of our very prominent learned speakers. We are having CA Ankit Maheshwari ji from Pink City, Jaipur. We are having Kuldeep Kothari ji from Rajasthan and now at Delhi. And we are having very prominent resource person, Ruchi Rastogi ma'am. I welcome all of you on behalf of the Institute of Chartered Accountants of India, on behalf of the SRSB. We are having the presence of very prominent and young chartered accountants, CA Pallavi Jain ji and CA Harshit Grani ji. And of course, I welcome all our honorable delegates who are present from each and every part of the country and outside country also. And Kuldeep ji, I think you can be on mute. Yeah, and friends, as we are very well aware that Sri Priya ma'am is the chairperson who is leading the Sustainability Reporting Standard Board in a great way. And I'm really grateful to President and Vice President for giving this responsibility as Vice Chairman of this very important board. And friends, as you are aware that the business responsibility and sustainability reporting, BRSR, is very crucial in today's evolving landscape, where stakeholders demand transparency and accountability beyond financial performance. It empowers stakeholders, helps manage risks, and contributes to a more sustainable world. And today's webinar will provide valuable insights on BRSR reporting and assurance. And I'm quite confident that with the support of our very prominent resource persons, CA Ankit Maheshwari ji, CA Kuldeep Kothari ji, and CA Ruchi Rastogi ma'am, we will be certainly giving the value addition to each and every participants. And I once again welcome our event enablers, CA Pallavi Jain ma'am and CA Harshit Birani ji, our young chartered accountants. And we are very confident that we all will be able to gain knowledge and expert views on BRSR reporting and assurance aspects today. So I am once again welcoming all our delegates from each and every part of the country, and of course Sweta Goyal ji, who is the secretary of this very important sustainability reporting standard board. I will not be taking a further time as we are very eager to hear our landed guest speakers, but I will certainly like to communicate to all our honorable members that we are trying our level best to see that how our chartered accountants can have the best of the expertise as far as BRSR reporting and assurance is concerned. We have to produce the best of the social auditors, and you are very well aware that it is not the exclusive area of the chartered accountants as far as the social audit is concerned. But we are very well aware that the chartered accountants are best suited. So how we can try to grab this wonderful opportunity? We are having the exams of the BRSR very soon, and you are very well aware the social audit exam is being conducted by another agency. But we are here to handle all of you to see that more and more chartered accountants can be the qualified social auditors, but other professionals are also eligible to become social auditor. I will request all of you to see that how we can grab this wonderful opportunity, which can be really, really great, not only for chartered accountants, but for the outside world. And in the times to come, you will see that sustainability will be the buzzword, and the social audit will be more important than the financial audit, which is the exclusive area for the members of the Institute of Chartered Accountants of India. So I will not be taking your further time. I once again welcome all the delegates from each and every part of the country, and I wish a very, very happy Holi and Dulandi to all of you. Thank you very much.
Thank you for your welcoming words, and we are very privileged and honored to have you here. Uh, Over to Pallavi ma'am. Pallavi ma'am, welcome you. And we would like you to take this forward and introduce our first speaker of the day. Thank you, ma'am. Over to you. Pallavi ma'am, we are not able to hear you. Please go ahead.
Very good. Hello, ma'am. Ma'am, I'm supposed to introduce Mr. Stugi, ma'am.
Ma'am, we are not able to hear you.
Shweta, I think she is there to introduce Ruchi Rastogi, ma'am. She has the following session.
Yes,
Sir, I'm requesting Pallavi ji to introduce our first speaker, CA Kuldeep ji, because Utkarsh ji is not able to join us today. If you are able to, ma'am.
ma'am, sorry, I'm not able to.
Okay, no problem, ma'am. Harshit ji, I request you, are you able to do that?
Apologies, ma'am. I am not
It's
really
okay.
sure.
It's okay, sir.
Yeah.
I'll do it. We welcome CA Kuldeep Kothari ji. He's having a vast experience in this domain area, and he's having a vast experience in the integrated reporting also. He's already addressing this issue across very many companies, and he is the consultant there too. I request Kuldeep ji and request you to, just enlighten us about this BRSR reporting and how we can integrate it and how we can report integrated reporting. Now I request Harshit ji to take this forward and introduce our next speaker. So because Kuldeep ji and Ankit Maheshwari ji will take the session together. Harshit ji, over to you, sir.
Thank you so much, ma'am. Thank you. It gives me immense pleasure. Very good afternoon to one and all. It gives me great pleasure to introduce to you C. Ankit Ji Maheshwari. C. Ankit Ji Maheshwari is a chartered accountant with exceptional track record of 15 years of professional experience into integrated reports and BRSR framework of large listed companies in India. He has established himself as an expert in IIRC. His expertise and reputation extends far beyond his consulting work. So, in that sense, he's also actively involved in various government initiatives in Rajasthan. He has not only contributed research publications on and articles on tax literacy, accountancy, and finance. Those have been published in some of the leading journals as well. All in addition to this, he has been a former secretary of ICI branch Jaipur and has been an active member of the organization. I hereby take this dais to welcome you, sir. I'm sure we will take some great words of wisdom from this discussion today. I hereby invite CA Kuldeep ji and CA Ankit ji to start their deliberation.
Thank you so much, Harshit, for such a warm introduction. I hope I am audible, and
Yes, you are.
as a moderator, you have a very vital role to play in the session. But let me first thank the vice chairman who has, spared his valuable time in joining us, here, Dr. Anuj Goyal ji. And sir, without any doubt, the way you have transformed the financial reporting practices, the Sustainability Board is very hopeful that the non-financial reporting practices, specifically the BRSR and integrated reporting practices, will definitely be transformed under your leadership. And it is very kind of you to give us this opportunity of coming here and deliberating. I also place my thanks to chairperson in absentia, PA Sri Priya Kumar ji, for letting this happen. and making sure that, as rightly said by Dr. Anuj Goyal sir, that it is the right time, opportune time to talk upon the mandates of BRSR, the mandates of integrated reporting. My special thanks to uh, Shweta ji for coordinating this flawlessly, and the Secretary of Sustainability Board. But my sincere thanks to my fellow speaker, CA Kuldeep Kothari, who has been instrumental in driving uh, excellent financial reporting and non-financial reporting practices since last many years. And it's always good to deliberate together. And we are also honored to have Speaker CA Ruchi Rastogi with us, who will navigate us through the mandates of BRSR assurance. And ma'am, it's indeed a pleasure to share a platform jointly with you on this session. And as you know, as the tone is set up by Anuj sir, we'll try that we justify every minute and every moment of next 1.5 hours together. And we look forward for a very insightful session. Lastly, we have a long panel here. Lastly, my sincere thanks to both the moderators, Harshita and Pallavi, for helping us out into it. And as webinars pose a serious challenge, I always feel that there's a lot of scope of deliberating it with audience. The moderators have a very vital role to play into it. So whatever questions you receive, please make a note of it. And at the end, we'll try that we help you out into this entire process. Thank you so much, Kuldeep ji. If you want to have some opening remarks by the time I share my presentation, which we will be
Sure,
jointly
sure.
deliberating.
Thank you, Ankit ji, for such a warm introduction. Anuj sir, first of all, I would like to place my thanks towards you, because as you have already said, I would like to share this incident also, because sir, by your guidance, I have already cleared the social auditor examination, and it was your vision for the profession. And as Ankit ji has rightly said, as you have transformed the financial reporting landscape in research committee, we are hopeful, and I am pretty sure that we are going to do some wonders this year. So my special thanks towards the chairperson in absentia, the secretary of the Sustainability Board, Shweta Goyal ji, my fellow speaker Ankit ji and Ruchi Rastogi ma'am, and the panelists. Because since Ankit ji has already formally introduced and have said that sir has set the tone, so let's start with the topic, because we don't lose on the knowledge part. That's why.
Right. Perfect.
Please,
Kuldeep ji. Right. So I take this forward from here. A brief introduction as to we will let's bifurcate the session as to how we will set the flow. So we'll decide. We'll deliberate on how both the frameworks are parallelly evolving, because for non-financial reporting, India is primarily on two frameworks. One is the BRSR framework and one is the integrated reporting frameworks. Though both frameworks are complementing also and distinguished in some ways. So both of us will try to tell you how these frameworks in the current scenario are being inculcated across the corporates. And when Ruchi ma'am follows this, she will deliberate on the assurance side of it. Interestingly, Kuldeep ji, because we have limited time, so I'll straight away come on the framework part. So let's first decide the framework, then decide how these practices are, put it into the BRSR reports and the integrated reports. I have gathered some snapshots of various BRSR reports and integrated report. Also, the mandates which law has given. Also, what is happening at a global level on non-financial reporting frameworks. All these things we will be deliberating. Any question which you face, you can put up, and we request the moderators to help us into it. Straight away, I take both the frameworks together, and there's a purpose of it. And Kuldeep ji, I was, you know, while they invited me as a speaker, while the Sustainability Reporting Standard Board invited me, I said, now we have come from a stage where we can't only stand alone look at BRSR frameworks, right?
Correct.
We have to integrate this framework as an excellent reporting practice in with integrated reporting practices also. So at a larger level, what has happened is, so the BRSR framework has been mandated, right? And that mandate Kuldeep will discuss through the process. But the problem which the companies face, and problem while we are working with these companies very closely, they face is how do they integrate the integrated reporting frameworks and the BRSR reporting frameworks. It has a long history, but to sum it up broadly, the BRSR framework, generally the companies when they present their BRSR reports, right, uh, they benchmark it to the SEBI mandate of BRSR. But not only the SEBI mandate, even the exchanges have put up some guidance, the institute has put up some guidance. So that is one area to work upon. But globally, when we talk globally, these frameworks come out of GRI, right? The SASBs, the CDPA as a outstanding reporting practices on environmental matters. So there has been a lot of working which has been done in last, I would say, 2 decades, and that is how this BRSR is mandated. Kuldeep will navigate later. Parallelly, in 2017, a very important development happened, and when SEBI asked companies to voluntarily adopt integrated reporting framework. So this was applicable on top 500 companies in terms of market capitalization, where SEBI came up, pitched in, and said that we are already in the process. I'll also share the notification what SEBI says. We are already in the process of uh, inculcating the integrated BRSR reporting framework. But henceforth, we expect that Indian corporates, for better reporting practices, benchmark it to the integrated reporting frameworks also. So that is why the idea to take this together was this only. Uh, Now let's look into how these frameworks are, similar, and to what extent these frameworks are different. Kuldeep ji, because that's the
Mhm.
problem statement, right? A
Correct.
BRSR report is coming out of 3 sections, which is the section A, the general disclosure section B, the management and process disclosure, and section C, the principal wise performance disclosure. However, and it's a statutory report which companies are expected to furnish, and in this, while Indian companies were adapting themselves to this change in reporting of non-financial reporting, uh, a, a separate framework also came up, and that is why both frameworks has to be integrated when you report it as a part of your annual report or any communication which you are making it with your stakeholders. So let's try to identify how these two frameworks are complementing, and to what extent these two frameworks are different. When I take it forward, right? So Kuldeep ji, I have tried to arrange some snapshots of various uh, entities reporting practices, so that we come to know what is the basic difference which I am trying to highlight. So this comes out from uh, an IT giant, right, who defines the reporting framework as to that the report is aligned to, I hope this screen is visible, aligned to GRI standards issued by GSSB, the Sustainability Accounting Standard Boards, ISO 14064, United Nations Global Compact, WEF Stakeholder Capitalism Metrics, and BRSR requirements of SEBI. The environmental sustainability section of this report includes the recommendations set out by Task Force on Climate related financial disclosure. I put this point here because in case to avoid this confusion as to which reporting frameworks we should benchmark, we have to understand both the frameworks. So when I talk about the BRSR framework focuses on 3 aspects, which is the environmental aspect, social aspect, and the governance aspect. These are 3 critical aspects on which the entire BRSR is focused on. When we when we talk in context of integrated reporting, so SEBI advisory pertains to the capital approach model, in which you have to identify six capitals which are mandated by SEBI once you start adopting the integrated reporting framework. These six capitals are your manufacturing capital, financial capital, natural capital, social and relationship capital, and human capital and intellectual capital. So, so when you look at the in a broader sense, so environmental capital for BRSR is mapped to natural capital in integrated reporting. When you talk about the social aspect in ESG or BRSR, right? They are mapped to social and relationship capital in integrated reporting, and the governance structure. And that governance structure can also be different governance structure for articulating a integrated report and articulating a BRSR report. So we have to interlink these frameworks before we start drafting our sustainability reports, before we start drafting our integrated reports. These frameworks needs to be clearly identified. And majorly, Kuldeep ji, the companies are facing this challenge of benchmarking their reports to right frameworks. And that's where I was so keen about, uh, taking integrated reporting with it. So first, let's define, distinguish between two frameworks. Second, as sustainability experts, as experts from the corporate reporting team, I am sure some secretarial teams also must be joining this session. Let's also clearly define the reporting framework for which you will benchmark your annual report clearly. So
So
on this,
one
yes.
one thing, Ankit ji. So when we are putting up this thought in front of the audience as well as we are discussing it, so when you talk about reporting scope and boundary, so the other issues which we'll be covering in the coming slides also about like materiality assessments, etc. So what I've seen in my practical experience is companies often mix these two things that you have already said, that if they are like defined reporting boundary at one place, not always, but often I have seen this type of issues like materiality assessment also. So how do we do we need to, like, since one is a statutory requirement, BRSI is a statutory requirement, other comes out of a recommendatory circular, as well as it is governed by the IIRC framework. So like, how do I integrate both these things, and what can be, or what is the basic difference between these two reporting boundaries or materiality assessment?
So interestingly, it's not only the reporting boundaries, right?
Hmm.
Uh, I'll pose a challenge in front of everyone, right?
Hmm. Hmm.
So what companies are generally doing? Companies are uh, identifying their stakeholders, right?
Hmm. Hmm.
Companies are doing materiality assessment based on this identification of their stakeholders.
Hmm.
Companies are creating value creation models and their ESG highlights respectively,
Hmm.
uh, based on all these frameworks. Now, when you look at these frameworks, when you define a reporting boundary for a BRSR report, right, you will realize that majority of the companies, not majority, I think 100% of the companies are defining their reporting boundary on standalone
Correct.
basis, right?
Correct.
Whereas when you adopt an integrated reporting framework, you will realize that integrated reporting framework, the boundaries are larger. So they
Correct.
define it in consolidated basis.
Hmm.
So in terms of defining a boundary, you have to be very cautious. So the first caution is in terms of defining a reporting framework. Uh, I think when you start writing all these things, if I have to write a reporting framework, right, I will align myself to only two reporting frameworks. One, what the mandate of BRSR is given by the Indian Stock Exchanges by SEBI.
Correct.
and other. If I benchmark it to IIRC framework, I think I have almost covered all aspects barring TCFD, because TCFD you have IFRS S1, S2 coming up, right? You have all the aspects which are mentioned in the reporting framework of this particular entity, right? Because they are global giants, right? So that is why only purpose of writing this is that, while we were on the previous slide, while there are countries, companies, right, who are adopting the CDP methodology also, right, where a reporting is done based for a city, for a country, for a company, right? These are those organizations, NGOs who are also promoting excellent reporting practices. So, if you are an Indian company primarily operating in India, the suggestion is that don't look after all these reporting frameworks. Your BRSR or BRSR core is already pinned down, right?
Correct.
Already pinned from, I would say, already bottomed out from all these frameworks. And
Correct.
your IIRC is the broader framework, right? Which also comes from IFRS Foundation. There has been a transition happening at global level also. We had a value reporting foundation, then we had a international integrated reporting council, then we have the IFRS
Foundation.
amalgamating, merging all this value reporting foundation and the frameworks. The problem is, which I was saying, which you also highlighted, when we do a materiality assessment, we do it for ESG. When we do a when we set up a reporting boundary, we do it for ESG. When we set up a reporting framework, we do it for ESG. But as companies, we claim that these are the integrated reporting framework. So all the steps which you are doing for BRSR are those steps which has to be done only in context of BRSR, and the rest remaining part of your integrated annual report has to be driven from the IIRC framework, which integrated reporting framework, which is being prescribed by IFRS Foundation. So that's one thing. Another problem, Kuldeepji, while you define this reporting scope and boundary, and I was, working very closely with a company for a BRSR report, in which the company got demerged. So some of the companies got demerged, and they incorporated into a fresh company. So when you define your reporting scope and boundary, you also have to identify all these things, that what all companies you have acquired during the year and what all companies you have emerged during the year. And the question on which most of the regulators are silent is that what do we do out of this? How do we report when a company is demerged during the year? Will my reporting scope or reporting boundary be changed? So in that context, it is essential to understand that when you define a reporting boundary, please don't define it as a mere statement that the reporting complies with statute. If you look at the reporting boundary defined by this company, this is an inaccurate way to define a reporting boundary, right? A reporting boundary has to be defined based on whether it is on a standalone basis, on a consolidated basis. If it is on a standalone basis, to what extent or what plants you have covered into it, and not only to that extent, you also have to define whether, in case if there is a demerger or some new companies which you have been acquiring, right, then how have you dealt with this transition of reporting boundaries, right, of reporting scope? Kuldeepji, anything you wish to add from here? So when you look at some reporting boundaries, right, and scope, I have extracted some annual reports, and this is interesting that how you are defining your reporting boundaries for uh, for your integrated reporting practice, and how you are defining your reporting boundary from BRSR perspective. Kuldeep, I was asking if you wanted to add something on the reporting
I
boundary.
was just speaking, but I thought I think that I was on like mute due to some
Okay.
tech issues. So I was just willing to point out that issue that you've already covered regarding that demerger thing. Like
Right.
in morning, I discussed it with you also. So correct me if I'm wrong. What I've understood from what you have deliberated till now, that since BRSR is a statute-backed requirement, so generally or on 100% basis, you see that reporting boundary, it says that it is done on standalone basis, because if the other company, which is a subsidiary, is also following like BRSR, then it will have its own separate reporting boundary. Correct, Ankit?
Correct.
And for integrated reporting purposes, since it is in a broader framework which goes beyond ESG, so it covers your manufactured financial capital also. So it becomes an holistic approach from company side. And what you have suggested is that rather than like for BRSR, there is a statute which is there, and we need not to look here and there. That's point number one. Point number two is that when you look about defining a reporting boundary or doing materiality assessment for IIRC, primarily I should look at integrated reporting framework.
Exactly.
That's what you were trying to say.
Exactly.
So what is your opinion? Like, if you ask me regarding the demerger thing, like since we do all these things day in day out, integrated reporting and BRSR is like one and same thing as a professional for us. So what I feel is that if you go by like plain reading of the statute, I need not to include the data. If a company has been demerged in between the year and the business has been carved out from the holding company or a specific company, in my opinion, we need not to accumulate or inculcate that data in the report itself. So what is your view in this particular scenario? Because this is something which is relatively a new issue post introduction of the new reporting framework.
Right. So I'll give more practical example of it, right? So once you go on principle 2, right?
Correct.
Principle 2 of BRSR report, which talks about business should have provide goods and services in a manner that is sustainable and safe. And when you start reporting the essential indicators and leadership indicators,
correct.
In essential indicators, you have to put some numbers on the research and development, which you have done for improving the environmental and social impacts of the product. And you have to put a data of your capex, right?
Correct.
To for the technologies which you have been building for your environmental and social impact, right? Now the question is, if I start excluding this data, right? If I agree to your point that in a reporting boundary I've defined that till whatever the cutoff date, till that cutoff date, we were this company was already or the plant was already a part of the holding company. But however, post that cutoff date, it has got demerged, right? So that is one way of writing it. But I would still say in this reporting boundary, right, I have to also define the quantitative data which I have considered, right, for my BRSR reporting purposes. And that is why I put up principle 2 here, that if I have spent some amount of R&D before that cutoff date, or if I spend some amount of capex before that cutoff date, right, then I still have to put that number into it, because that is an initiative before the cutoff date which my holding company was taking. Right. So here, defining this reporting boundary again becomes very important and critical. And if I am not put up that data, or I am not including that data, then that also has to be put up into the reporting boundary itself. So that is what we were saying, that a mere statement of writing, when you look at the
Correct.
reporting boundary by this company, right, I think they have completely lost the way while they were defining this reporting boundary, right? So this
Correct,
was
correct.
not the boundary of financial statements is not what is expected to be defined when you prepare an integrated report or even when you prepare a BRSR report. And that is why I have put up examples of a FMCG conglomerate, a pharmaceutical company, right? For how are they defining their reporting boundary for integrated reporting purposes, and how are they defining their reporting boundary for sustainability purposes?
Let me put in rationale behind this to all of you who have joined this webinar, that why we are discussing these practical issues, because what we feel is we feel as a professional that if anything is given in the format, I think that is to a larger extent it is not required to be discussed. So if there are many gray issues which are there in these reporting frameworks, because they are evolving, they are quite new. So it is better to discuss it from practical point of view, and hence we have tried to integrate both these frameworks, IR framework as well as BRSR, and BRSR has come out of all these frameworks, international frameworks, or be it IR framework. So that is the rationale behind discussing all these things. So it is one and same thing. And post this session, I think you will certainly feel that some of the practical questions that you will have or you had last year while drafting your BRSR report are larger extent.
Right.
Ankit.
Right. So in case you have any specific questions pertaining to reporting framework or defining reporting boundary for BRSR or for integrated reporting, you can put up here, right? And because now we are moving ahead from, we have defined a framework for integrated reporting, we have correlated it. How do you define a framework for BRSR reporting? And similarly, we have defined the reporting boundaries also. Now we move on the next steps while we start preparing an integrated report. And the next step will be, how do you identify stakeholders and how do you do materiality assessment? As I told you in the beginning only, Kuldeep ji, that and then we come on the assurance part of both the reports, right? But let me first put this forward, right? I hope this is a visible materiality matrix, right? Now this materiality matrix is a typically ESG materiality matrix, right? Which has been incorporated as a materiality matrix to integrated annual report. So one thing is sure, Kuldeep ji, and that is what I have discovered. The broader framework, the principle-based framework is IIRC. So if you do a materiality assessment considering IIRC, you are automatically covering the ESG related material matters there. But as a part of an integrated report, you can't put up your material matters of ESG only. So the concern on this particular materiality matrix is that this materiality matrix is nothing but a ESG materiality matrix. So that is my concern, and that has been incorporated in integrated reporting material matters. So that's where we have to understand that there could be a case that you define a materiality matrix, right? And for integrated reporting purposes, and you can definitely use it for your ESG material matters, which you shall be reporting in, I would say in point number 24 of your general disclosures. Yes, Kuldeep ji.
So it has changed a little bit. I agree to what you have said. When you see the revised framework for BRSR reporting, now this has been shifted to point number 26. But
sorry, 26.
That's a slight shifting of number doesn't change the whole context. And I agree to what you have said, that having two different materiality assessments, because identifying material issues, in my opinion, is not something which is a cakewalk, because there has to be a process. The process has to be, approved by either board, or if the powers have been delegated to ESG committee, or if the powers have been delegated to CSR committee, as the case may be, it has to be approved from that committee or board itself. So it becomes very important that while while you are identifying material issues which are to be reported in BRSR, say point number 26, you need to write it down as that whether it is a risk or opportunity, what is the rationale behind it, and the rationale comes from your materiality assessment or materiality metrics that you prepare for your back working and which you present before board or the committee also. So you as a practical suggestion or practical advice, you should always look from a horizon of 3 to 5 years when you are defining these material issues, because tomorrow, like if you see your company's progress, how it is going on, what are the future plans, how it is expanding, in what environment you are supposed to operate in coming years, and define your material issues for both I would say IR framework, if you are reporting on integrated basis on BRSR from a 3 to 5 years horizon. So it doesn't make a chaos for you that each and every year or every 6 months or every year you are going to your board or the committee that yes, we have identified these two new material issues and these are risks and opportunities, and it will become a very awkward situation for the professional who is handling it also. So while defining materiality metrics, I agree with you, Ankitji, that if we take a holistic approach and if we do it from IR's perspective, it will automatically cover ESG part also. And while defining a materiality metrics or doing the back working, let's like put in few columns or few specific disclosure requirements if they are there in BRSR. So it doesn't become say duplicate exercise for you also. That is what I think you have tried to communicate.
So I am saying no duplicacy is required. The problem is that people are doing materiality assessment based on ESG only, and they think that they have covered the entire parameters of the integrated reporting. This is happening with 9 out of 10 companies, right?
Okay.
And if you can go on further, you can go on evaluating the annual report. I found very limited annual reports integrating it to the IR framework about their materiality metrics.
Okay.
I have a sample. I have another sample of a materiality assessment, and this materiality assessment is actually I would say approximately, because again there's a problem. The problem comes while you start identifying material issues and they are correlating their material issues to risk management and the governance. So my idea, our idea, the best practice, the IIRC idea is that all your material issues should fit into these 6 capitals primarily, right? The risk management and governance are separate sections, are one of the 8 core elements of integrated reporting framework. So there was no necessity, but the company is approximately tried to integrate their material issues to each kind of capital of integrated reporting. I rarely see this. The practice,
Correct.
the standard practice is what I have shown you is a standard practice, and I think companies now should start gearing up themselves for switching to integrated reporting practices when you claim that you are preparing an integrated report. Kuldeep ji, interestingly, this company which I am talking about, the materiality matrix, this is their 8th integrated annual report.
Quite a long journey.
So that transition should have taken. I get that point that in year 1 we are only able to identify material matters for from ESG perspective, and generally a lot of companies in their materiality assessment writes interesting facts. So one fact which comes out is that we conduct materiality assessment in every 3, 4, 5 years out of 1 year, right? In a dynamic business environment, you are expected to test your materiality whenever you are publishing a annual report. So that materiality testing, there is no law, no mandate which exempts you to give an annual report. However, you have set up a process of 3 years, 4 years, 5 years is entirely your prerogative, and because it is a voluntary adoption, so people are not questioning it. But I am sure from ESG perspective materiality assessment, when an assurance will be given on the same, right? And you also deliberate on the assurance mandates which are coming up. you will realize this fact that the ESG auditors, the social auditors, right? They will expect you to do this materiality assessment uh, on a very frequent basis, right?
And
So
when you spoke about risk assessment or integrating, risk opportunities and threat, you will see that when you like if you dissect BRSR's reporting framework, or what the framework SEBI has provided us as a revised framework, you will see that almost all of the things are coming out of these few global as well as integrated frameworks only. When you see point number 26 of section 1, you will see it has a column inserted in it that if there is a risk, if a material issue has been identified as a risk, then you need to specify the mitigation approach also. So automatically when you'll do a risk opportunity or threat analysis for integrated reporting, that will flow into your BRSR report also. And why we are saying again and again that both the reports have to be an integrated one, integrated not in terms of integrated reporting, integrated in terms of reporting symmetrical data at both places. It should not be a case that you are reporting something is a opportunity in your integrated reporting framework or section, and that thing is coming as a risk in your BRSR framework. That issue may be due to maybe a certain specific consultant or in-house team is doing it for IR, and certain other team or in-house team is doing it for BRSR, as well as when we speak about this peer benchmarking, Ankit ji, so it becomes a very big problem, because like if I am in a service provider, I look that yes, who is at the helm, or who is at the top of my industry, and I'll do my own math also, but I'll try to see what they are doing, and I'll try to incorporate the same thing which we have recently experienced, is that the same thing is happening with material accounting policy also, though it is not a related topic, but the same is happening because people are still waiting that bigger companies to report, or bigger companies to come up with their reporting structure, and they'll try to follow that. So while you do peer benchmarking, I think you need to benchmark law first, otherwise you will inherit all the issues which are there in your peers report also.
so I think very valid point, right? I was with a FMCG conglomerate, right?
Correct.
And they have while adopting integrated reporting, they have not used the capital approach model, and they now come up saying that we have used a stakeholder approach model. So that is why I'm saying benchmarking the framework is an important activity. The framework which SEBI has given you is a capital approach model. So what has happened is their entire materiality assessment, their entire value creation model is based on some stakeholder approach which they have, internally discovered. Not looking at what law has mandated, what SEBI has mandated, what IIRC has mandated. So you are absolutely right. I think we have to be very, very cautious about, selection of frameworks, benchmarking it to right frameworks, correlating both the frameworks. That is something which is most
Correct.
essential out of it, right? So, so that's issue number one. So now we have defined a reporting boundary for both BRSR. Please, now we have defined a reporting framework. We have identified the material matters. We have correlated the material matters to various capitals. That's when your structure of reporting your structure of BRSR report and integrated report has to be prepared. Now, not only this, so now you have two options to take it forward. So now, when you have defined all these things and benchmarked it, you will take a direction for your integrated reporting. For your integrated reporting purposes, you start defining each capital, Kuldeep ji, right? All these capitals have to be defined. When you define these capitals, right, you will realize the better you define these capitals, the more you are able to use it for your BRSR purposes. And I'll give you example.
Agreed.
We will open a BRSR report. I'll give you example where if a capital is rightly defined, rightly identified, the material matters are linked to that capital. When you publish your BRSR report, it becomes a cakewalk. So,
Correct.
so the first thing before you put up a BRSR report, if you are adopting an integrated reporting, the first thing which you should do is to define your capital, and not only define your capital, to quantify each capital. We will discuss this separately, Kuldeep ji, but I want you to, first, let's also look after uh, uh, the evolution part of BRSR, and then I will correlate it to integrated to conclude this further.
So, but Ankit, what I would suggest is that I think since we are running short of time and we are already standing at 2:56, so rather than
Right.
discussing what BRSR is, I think we should continue with the practical discussion approach only. So
Okay, fine.
it will be
Fine.
more helpful for the audience to, because I don't think that
Right.
we can take 10-15 minutes more than time of Ruchi ma'am's time. So I
Right.
think we should discuss the practical issues, and then if any questions comes on specifically
Okay.
on the theoretical part or the format part, we'll take it at the end.
Okay. So what I am doing here is I'll start correlating the BRSR disclosures, right,
Mm.
with 3-4 important things. So now I have told you that you have to define your capital. You
Before
have to,
before
right.
before you do that, like can we have 2 minutes or a minute or so on that, how BRSR report is and what all the disclosures we can,
Exactly.
the
Sure.
last slide,
Sure. Sure.
that's it.
Right. Please,
So,
please.
so when you see a BRSR report or the revised framework which has been published by SEBI in July 2023 itself, so primarily you can, dissect the disclosure requirements of BRSR into 5 parts. So it has some tables, some journal informations which are required to be reported. That is not something which is very specific or technical. There are some free flowing text in which you can write your subjective things. You can write in detail about what measures that has been taken by your company in terms of your approach towards health, safety, or environment. Then there are some tabular questions which will automatically come from already the reports which are being generated through your SAP or your reporting software. Then the most important part on which I think the data assurance part, Ankit, on which I think Ruchi ma'am's expertise will come into play, because there are very complex calculations which are involved in this this part where you report about energy, water, and waste. I was going through one article on BRSR. So in general, like if we talk in general, we'll say there are 2 or 3 type of waste, but there are more than 6-7 type of wastes which are required to be the treatment of the same is required to be identified, discussed, and it is required to be documented also. Then you come about intensity ratios, like some of the ratios. One such example was in, I think, principle 4 or principle 6, if I'm not wrong. It is about disclosing that intensity ratios related to water. So previously it was a voluntary disclosure in which per rupee that water intensity ratio adjusted to the purchasing power parity is what it was required to be reported on voluntary basis. Now it has become mandatory. Then the more complex calculation regarding GHG emissions, which is scope 1, 2, or 3 emissions. Like scope 1 emission is that in which what all carbon or GHG related emissions which are coming out within the boundary of your organization. Scope 2 primarily talks about, or it is about the external factor emissions. And Ankitji, when you will be surprised to see, I have seen few reports also, like people or the companies are incorporating each and every type of gases into GHG. So one example is this: carbon monoxide is not a GHG gas. It is not a GHG emission, but yet the company was including it into the GHG emission part. Then the fifth is policy related disclosure, that is against the principles or the nine subset of BRSR core. These are broader five parts in which you can dissect your BRSR related disclosure requirements.
Okay, Kuldeep ji, we have a lot of questions coming up,
Okay.
but right, we will discuss it in a very brief way. You have deliberated over it. Also, I would tell the learned audience that while we were deliberating, we have not gone into the basics of BRSR, because now we assume that whoever is attending it, we have evolved from a stage that if the basic things have not been covered up, right? So that is why we only covered the practical aspects, and from the aspects, while you are at least both of us will look from the aspects. If you are preparing a BRSR report as a finance controller, or from a corporate reporting team, or from sustainability teams, then how we can help you. And Ruchi ma'am probably might have, she also have a very limited time, only would throw light on what the assurance part pertains to. So hope there is, there is no expectation gaps. So anyways, I think you have rightly told. Only thing is, if so, I'll tell you the approach to do it, right? If while we prepare these BRSR reports, how do we do it? So we categorize it into very layman's language, E, S, and G, right? So environment have three things, three important things, and there are generally three separate teams at plant sites, or if you're a service industry. One is energy, other is water, and third is waste, right? So you have to interact with these three separate teams to capture this data for your energy, for your water, for your waste. Kuldeep ji, what I realized reading all these BR reports, working with these companies, because a lot of companies adopted this last year only for the first time. And so I realized that on all three fronts, the companies failed to communicate their approach towards the three important measures. As chartered accountants, as professionals, two issues are our strength: social and governance. We have done a lot of, in today's era of practicing, everybody has done a lot of human resource audits. Everybody understand what human resources are, right? And the governance part is always taken care. Chartered accountants are, helping out in the CSR initiatives, reporting the CSR initiatives. All these things are our strength. Where we lack is the environmental aspect itself, and that is why you have mentioned it is a complex calculation. And yes, it is a complex calculation, because still those the emissions which you are capturing, still the process of your water treatment, still the process of how are you recycling your waste. I was reading an annual report of a company in which they said that they are recycling their waste through a 100% waste through a certified vendor, right? So they were recycling it. So they have written that we don't have any in-house facility for waste recycling or waste management. Now this is the change in approach which I was saying, that we have to redefine the approach. If I have to write that BRSR report, I would say that we are getting this done through a 100% waste is recycled through a.
So what you are pointing out is that, like on question number 4, that on parameters related to water, what can be a water consumption related thing for a service industry? Then it can be the drinking water. It can be the water which is being used in toilets and all. It can be the water if it is being used in the cooling plant, if it is in-house. I don't see any measure such, separate area in which water consumption can be, water consumption related data can be derived from a service industry. Am I right, Ankit ji?
Correct.
Then the question number 5 is related to whether it is, since it has been announced by SEBI and it is mandated, do you think that it doesn't, do not you think that it automatically overrides IR? I think I would also answer, and you would also like to add some your thoughts on this. BRSR is a separate mandate which is coming out from SEBI's LODR and its other requirements. IR is a separate thing. IR is altogether a separate thing. Like the same thing has happened with MDNA section. MDNA is management discussion and analysis. It is mandated by SEBI regulation 34(2)(e). But as soon as companies have started, adopting IR integrated framework, they thought that it is all one and same thing and we can mix it. So BRSR is a statutory report. It cannot be clubbed, and both things are not, cannot be mixed. Neither it overrides IR, nor IR can override it. Our point here was that how you integrate both these reports in a way that your efforts are minimized and your message that you're trying to communicate to stakeholders is coming out loud and clear. Ankit ji.
BRSR is current, IR is future,
Hmm.
right? If I have to broadly summarize it, see, we publish two reports. We separately publish our BRSR reports, which we were doing like our BRR reports, correct?
Correct.
And we also publish our annual reports, in which a lot of thrust is now given on the integrated thinking and the integrated report. So a BRSR report will essentially be prepared as per the SEBI framework, which the gentleman or whoever has asked this question, right? So BRSR has to be okay.
Please.
No, please. You were adding something.
I was coming on to the last question. So please, you conclude and
Okay.
then I'll.
So BRSR comes from a mandate of SEBI, and the BRSR report has to be prepared as per mandate. But why are you mixing it when you are giving an integrated report in your AGM? Right. So if you are not adopting integrated reporting, then the only mandate which you have to adhere is to BRSR mandate, which is prescribed. I am talking of a situation where majority of the top listed entities have started adopting integrated reporting also. So I hope that is clear. Okay, Kuldeep ji, now you may,
Now the next question was related to the issue that you have pointed out, that whether a demerged entity will be included in the reporting per se. So I think I agree to disagree, and we might have different views on this, because I think that the FAQ is not clear on this. So in my personal opinion, it is kind of a discontinuing operation from financial reporting perspective, or a demerger from financial reporting perspective, or in which you need to give a note below the disclosure that yes, since the company has the business or a particular part has been demerged into a separate entity, so it is reported in such a way. In my opinion, it shouldn't be included. That is what I feel is, and I think your feeling is that it should be included with a note below the disclosure.
My only point is, if you include it or you don't include it, we don't have a mandate, so there is no point commenting. But your reporting boundary should clearly identify this issue.
Then the next issue is related to what happens when you are working in a leased premises and you don't have separate water bills. So how do you segregate that water consumption, and is there any way that we can figure it out, or like with the help of water scientists or specific ESG professionals? Is there any back working that can be done, Ankit? What is your opinion on this? Because it is not something which is coming out of mandate. It is something which is related to common sense, or what in practical situation what one need to do.
So in certain cases where I am sure it is not only the water consumption, right? When we report water, we report it from lot of perspective, how much we are drawing it from groundwater, how much we are drawing it from other sources. So to the extent possible, we have to start giving these calculations. Unless you don't have your separate water meters or something like that, right? There has to be some methodology, and such approach has to be documented in the report also, that I am sure the water expenses in the company will be borne on some basis, right, Kuldeep ji? So whatever water expenses you are capturing, right, it has to be borne in some proportion. So that approach needs to be captured while writing down the water
And
requirements.
the same is with energy also. And I think for water, to be specific, it can be like I've heard about some methodologies or back workings. It can be like, if it is for service industry, it can be attributed to headcounts also.
Right.
So as to calculate
So
what an
whatever
appropriate.
costing methodology you are using, if you are putting up into your books, right? If there's an expense which is coming out, so the backward calculation can be done with the help of the technical team, right? And we might not be the best experts of handling these calculations, right? So from reporting perspective, that's something which was the thrust. I would say, Kuldeep, I'll take 2-3 minutes, right? And then
Sure.
we take all these questions in last, if some questions are still left, and then we hand over to Ruchi ma'am, because the important part is still missing. So when you look at the section-wise disclosure, so what our approach has to be in section-wise disclosure, how we are integrating it to the sustainability goals, how we are integrating it to the materiality topics. Each section, each principle has to be integrated. How we are integrating it to IR capital, and that is why I said that please don't include risk management or governance as a part of capital. Otherwise, your BRSR report starts getting impacted. So
Correct.
risk management is not a part of IR capital. So there,
Yes.
if it is a general disclosure, Kuldeep ji, I would definitely showcase my impact on human capital, my impact on financial capital, and one very important capital which the gentleman who has prepared this report must have missed it, is the manufacturing capital, because I
Yes,
like
yes, correct.
in my general disclosure only I start capturing the plant capacity and everything,
Yes, yes,
right?
exactly.
So, and similarly, I am identifying my stakeholders. This is a snapshot of a BRSR report, a very proximate example as to how you can link it to a BRSR report. When you progress this for each disclosure, you realize this fact that for each disclosure, you can link it to the right material topics, right? And when I say management and process disclosure, so it is not only the governance which I am talking about, right? That in the process disclosure, again we have our capital framework coming up, right? So with each principle, you see this kind of an integration, and that's the integration I'm talking about, and that was our thrust, right? Kuldeep ji, if you can very quickly throw light on the timelines, right, of BRSR mandate, and then we conclude this, because it's already 3:30. Let's target to do it in 2-3 minutes more, and then we take a question
Okay,
or two.
perfectly fine. So as far as BRSR timelines are concerned, since BRSR core has been introduced from this year only, this is the first reporting year for the revised framework or the amended framework, because there has been a lot of changes in SEBI LODR regulations also. And if I'm not wrong, the BRSR core of the value chain has been notified on 12th of July, if I'm not wrong. So when you talk about BRSR core, if it is if your company is not within the top 150 listed entities by market capitalization, in that case you need to report your BRSR as per the revised framework, which includes the KPIs related to BRSR core. And what is BRSR core? I would I feel that Ruchi ma'am will throw some light on that also. But BRSR core is basically a subset of 9 principle based a separate kind of a report in on which assurance has to be obtained from an independent professional. Then value chain disclosures means that whether it is applicable on both downstream or upstream. Downstream and upstream means for both suppliers as well as your buyers, which accounts for like 75% of your total value of a particular segment. It is required to be followed from next year on comply or explain basis, which means that if either you comply or you explain that why it has not been complied. So the framework or the requirements are being strengthened or are being made a little bit more tough for the companies to follow with. And there that's why our thrust was on integrating both these reporting frameworks, because in this changing era or a dynamic world, and day-to-day responsibilities also that you all handle as a sustainability professionals or a reporting team or from secretarial team per se, it becomes very difficult when you do two separate working for two separate reports. It has to be taken care of that it is a statutory report, but yes, there are ways in which we have discussed and in which we have said also that it can be integrated in a way that your efforts are minimized and the impact that you are trying to obtain from the reporting per se, or the message that you are trying to communicate to your stakeholders, comes very loud and clear. So I think, Ankit ji, we can
Last thing,
take. Please, please.
last thing. Shweta, we have a minute, or we are running short of time?
Short of time, but still you can have a minute. Yeah.
1 minute, right? All I am trying to show is the integration of the section of a BRSR report to uh, integrated report and BRSR report. So that's only thing which, let's. I just wanted to put up an example, and I hope my screen is visible.
Yes, yes, it is visible.
You see a BRSR report coming up, right? So this is a BRSR report of CIPLA, right? And when that's what I was saying, you read point number 4, employees, right? So the entire report is prepared in such a great fashion that it can be easily linked to the integrated reporting sections of the report. So when you see employees, refer page number 66 of human capital, right? Differently enabled employee, turnover rate of permanent employees. And that is why I said that defining your capitals for integrated reporting is very important. Your entire BRSR report, the majority of your BRSR report gets prepared into that process, and there's a lot of transparency. So in this mandatory format of BRSR report, I have a very limited scope or limited room to play upon, and that is why I was asking for qualitative disclosures and descriptions while I was asking you to define it from integrated reporting framework. So, so from our side, Shweta, I think there are certain questions which are left, but
Yes, sir.
but primarily I'll take up one question. Rest, we can, I will put our response as Ruchi ma'am starts deliberating it, because it will be too late. So somebody asked, would you like to understand the latest amendment and role of finance controller? So as finance guys, it is essential that we start incorporating the non-financial reporting frameworks into our professional lives. All transitions have taken place. I can give you a live example. uh, I have a gentleman who is a friend who is working in Reliance. He's Mr. Raj Malik. He was working for the financial reporting side till last year. The entire, and he's the finance controller. The entire report which we were discussing for RIL, Mr. Malik was responsible for the sustainability report, and they have their separate teams, coming up for it. So my point is that you can't now only stay focused on the financial reporting side of it. Thank you so much, Shweta. Thanks to Ruchi ma'am for being patiently waiting. Sorry if we took some of your time. And over to Kuldeep ji. Thank you everyone for joining us.
Thank
Yeah,
you,
Ankit ji,
sir.
I think you have already covered each and everything. There are two questions left, which will, Shweta ji will put in our
Yes,
responses
sir.
while Ruchi ma'am will deliberate. So,
Yes, sir.
on behalf of the committee, we would like to welcome Ruchi ma'am to the dais, and then the official, introduction, and then over to Ruchi
Yes,
ma'am.
sir.
Thank
So
you.
before moving on to the next session, I would, I would take the privilege to introduce our Vice Chairman once again, CA Dr. Anuj Goyal ji. He is the Central Council member and Chairman of the very important committee of Professional Skill and Enrichment Committee, Publication and CDS, and he is the Vice Chairman of SRSB. He is having a vast experience of 30 years of profession and having so many professional degrees, and he's having an extraordinary work in the Central Council for around 17 years and 3 years in Regional Council and 6 years as in branch chairman of CIRC. and he is heading various committees of ICI also, member of the editorial board and so on. We are having a privilege to have Anuj sir with us on the SRSB board. And also, we would like to welcome our CA CA Pallavi ma'am to introduce our next set of speaker, Ruchi ma'am. Over to you, ma'am.
Thank you, ma'am. A very good afternoon to all the members present. It is my pleasure to introduce our next speaker, CA Ruchi Rastogi ma'am. She is a partner in KPMG in India and has over 22 years of working experience. Majority of her working experience has been dedicated to specializing in accounting and reporting matters, including expert knowledge of IFRS. In her current role, ma'am is part of the technical group of the firm that devotes time on keeping abreast of technical developments and emerging issues. She is also responsible for thought leadership and knowledge management activities of the firm. Key aspects of her role include to keep abreast of technical developments and emerging issues relating to IFRS, Ind AS, ESG, and other regulatory changes, and help create firm's thought leadership publications such as accounting and auditing updates, first notes, and voices on reporting. Ma'am, we welcome you. We are honored to have you, and we look forward for your guidance. Over to you, ma'am.
Thank you very much. Am I audible clearly?
Yes, ma'am.
Okay, great. I think I'm hearing an echo. Somehow I am hearing an echo in my voice. Can you check?
And there's an echo in your voice. Even we are hearing that echo.
Yeah. Just give me 1 second. Now it's better. Yes. Just give me a second. I think it should be better now.
Yes, ma'am.
Thank you. Thank you so much. I would like to, thank CA Anuj Goyal and CA Shri Priya for giving me an opportunity to come today. And also, I heard, practical experience by CA Ankit Maheshwari and CA Kuldeep Khotari on the aspects of BRSR and integrated reporting. And I really like that how practically they explained how the reporting is evolving in this area. And I think I would like to now pick up threads from here and look at the assurance aspects. We know that sustainability is growing in strategic importance for companies. And we all know the reason why. We are facing climate, social, and geopolitical issues. And addressing those are the ESG priorities that we all need to take up and, the companies with which we work. Over last 3 decades, sustainability reporting has been largely voluntary. It is now that we are seeing key developments that are shaping the ESG agenda in our world. So I would like to put them in 5 buckets. Number 1 is policy and regulation. Second is there are sustainability reporting frameworks that are developing. We are also seeing climate litigation and stakeholder activism in this area. We have seen that RBI is very active with sustainable finance, and SEBI has also come out with various regulations in this area for ESG funds and ESG rating providers. And lastly, greenwashing or social washing is an area of concern. For India, the landscape of ESG reporting is spearheaded by 3 regulators mainly, like MCA, SEBI, and RBI. I'm not going to delve into a lot, but they have been coming out with various regulations, and my earlier speakers and co-panelists, CA Ankit and CA Kuldeep, mentioned about BRSR and IR reporting in this area. However, what I want to also highlight that there are various local state laws and many environment and forest ministry laws which are in pipeline, which we should expect coming out in the monsoon season, which are going to also affect the landscape of reporting. And we see that carbon credit exchange being set up. So all these initiatives, we will see a lot of work in this area that will happen. What we are also seeing is that there's an increase in ESG assurance, and the reason being that we would like to assess the robustness and reliability of the disclosures that the companies are making. So in this regard, I think I would like to deep down into the assurance aspects of BRSR reporting, and I will request my colleague to go to the next slide, please. So as C. Ankit and C. Kuldeep have already discussed the BRSR core framework and the requirements of BRSR, so I'm not going to spend time on that. On assurance aspect, we have two frameworks that are available currently. One is the globally accepted international standard ISA 3000, which is on assurance of engagements other than audits or reviews of historical financial information. And the second one is ISA 3410, which is on assurance engagements on greenhouse gas statements. Similarly, our Institute of Chartered Accountants of India has issued, similar standards for us. So SSA 3000 and SAE 3410 are largely aligned to the global standards, and these are the two standards on assurance that we are looking at in this presentation. Moving on to the next slide. The other aspect, if we look at on the assurance aspect, is that these standards, SSA 3000 or ISA 3000, look at the concept of assurance at two levels. Which are these two levels? The two levels are reasonable assurance and limited assurance. Now, the nature and extent of a chartered accountant's consideration may vary depending on the complexity of the assurance that they are taking up as part of the engagement, and on the nature and complexity of the subject matter on which they are providing assurance. So, for example, if it is a relatively less complex engagement, and maybe inquiries would be sufficient to identify a material misstatement, then we could look at a limited assurance. But a reasonable assurance would require a practitioner or a chartered accountant to basically design the relevant controls, whether they ensure that whether they have been implemented. It will be something to the effect like we do for a financial statement audit. So it will have the same kind of rigor in a reasonable assurance that we will see. Now, for the BRSR core, SEBI has mandated for top 150 companies for this year to go for reasonable assurance. So for the 9 parameters on which any practitioner would work for, would need to obtain a reasonable assurance, which will be in the same way like a financial statement audit, i.e. it would require a lot of rigor, a lot of investment to understand how the engagement or audit would take place on this engagement. Moving on to the next slide. This particular slide that I have prepared basically showcases a flow of an assurance engagement, which is very similar to what we do in a financial statement. So I'll give you 2 minutes to just, some 30 seconds to look at this flow, and then I will discuss each and every one of them. So let's look at the right-hand side of this slide. On the right-hand side, when we are accepting an assurance engagement, we will have to understand the engagement. We will have to understand the entity. We will have to understand whether as an assurance provider, we are independent. We will do certain preconditions evaluation. We will ensure that the team that is working has adequate skill and ability for the engagement, and what are the terms of engagement. At the second level, we will look at the planning and performing of the engagement. We understand, what is the entity, its environment, and why does it want a sustainability or a BRSR core assurance. We understand what are their internal controls. We need to establish materiality, assess risks, including fraud risk. So similar process that we do for financial statement audit. And then we have to go to the left side where we see the risk response. We will have to do certain test, control testing, and certain substantive procedures. And finally, we will evaluate are there any misstatements. Of course, documentation becomes an important part of it, completion activities, reporting, etc. So this is the whole life cycle of an assurance statement that a practitioner would apply to a BRSR code. I would like to spend some time on understanding the entity and its environment. I think some of the examples that CA Ankit and CA Kuldeep took, like Reliance, Cipla, Wipro, it is very important that we understand the entity and its environment when we are picking up the assurance on that engagement. So what is the objective to basically, while understanding the objective to understand the environment is what are the risks of misstatements? Is there is there a possibility of a fraud and error in our sustainability report? So when we do that, the first thing that we understand is BRSR. If we were to pick up BRSR core, is that we will understand what is the nature of the business. Is it a manufacturing company? Is it a service company? What all basically are the areas of this entity is. Then what are the legal and regulatory frameworks under which it operates? Does it have policies and procedures and controls around them for compliance? Does it have any covenants in its borrowing terms which are basically attached to their sustainability objectives? So as you will see in our term loans, we have some of the inventory levels or a debt equity ratios. We will slowly start seeing the sustainability goals becoming part of our borrowings. RBI has recently released a green deposit framework, and the money that they will release as part of their green finance bit will have these covenants in the loans that will be given to the companies. So it becomes very important that we understand such covenants. And then what are the controls an entity has to prevent or detect non-compliance on these aspects. One way to understand an entity's environment is that you need to understand what is their vision on sustainability. Of course, reporting on BRSR code has to be done. But many times, as we are seeing, sustainability becoming a goal and an objective of an entity, we need to understand what is their short-term, medium-term, and long-term strategy as part of their sustainability. This strategy is going to change their business model also. For example, if we were to look at an automobile industry or an automobile company, we see them, they are changing into hybrid model of vehicles or only green energy vehicles. So this is again changing their goals, objectives, and their business environment in which they are operating. So it's very important to understand their own strategy. Then what are the push factors for them to go towards that goals and objectives? It has to be understood. Are there investors asking for more information? Are there loan givers asking for more information? Who's on their board to look after the sustainability objectives? All these aspects will be very important when we try to understand an entity and its environment. We also need to look at some legal, documentation like a correspondence with a regulatory authority. Like in various states, you have these laws which give you a consent to operate or a consent to establish. Now, these kind of documents also lay down as to what level of emissions a company can make or their factory can make, or what kind of waste they can generate and what they need to do with those. So understanding all those aspects will be very important. Then we have to look at their prior year reports and understand how it is, how they are evolving in this direction. Any other aspects is, as we see, COP28 have recently taken place, and many companies in India who have multinational parents outside India, they may have already set out goals and targets on their emissions. So how are those goals and targets affecting on their subsidiaries in India? And maybe Indian companies, in India themselves have set out certain goals and targets as to how their emission levels are going to reduce, or they want to reduce over a period of time. So these aspects are very important to understand when we are looking at environment. Again, the idea is that have they publicly written down their commitments in future forward looking on these aspects. Then we need to understand what are their policies and practices, how are they changing their business models, they are changing their policies, how are they explaining their policies to their value chain providers, as it was covered by CA Ankit and CA Kuldeep, that BRSR would like in future to cover your value chain. So a lot of interaction with value chain and subsidiaries, associates, and joint ventures will take place. So this is an area where we should spend a lot of time, and that's why I've kind of stopped here and taken some time to explain you this. Moving on to the next slide. Now, as we've understood the organization, I think it's important we look at some of the preconditions for evaluating this particular engagement that we want to take up. We have to understand what are the suitable roles and responsibilities we have. There's a new term in this standard SSA 3000, which is called underlying subject matter. Now, if for financial statements audit, financial statements are the underlying subject matter. But for a sustainability audit, the subject matter could be just GHG, could be just water, could be other aspects of social. So this has to be very understood as to what is my underlying subject matter on which, as a practitioner, I would be providing an assurance on. Then the next step is, once I've identified, for example, water or GHG is my underlying subject matter, what is the suitable criteria? As in, what is the reporting boundary on which I am going to be giving assurance? So this is important. For example, for financial statement audit, we would have INDES, Indian GAAP, or US GAAP as the basis of preparation. So again, for an underlying subject matter, we need to understand what is the basis of preparation, and that's what is called a reporting criteria. Then this criteria has to be available to intended users. In order to do assurance, we need to obtain necessary evidence, and then we issue a written report, and there's a rationale and purpose for that report. So this is again an area on which we would have to spend time when we are doing assurance. Moving on. Another aspect for an assurance provider is to adhere to the independence requirements. Before accepting an engagement, we have to follow the ethical and professional standards. We have to follow the guidelines of institute in the code of ethics. We have to look at the standard of quality control, SQC1. And also for BRSR reporting, SEBI has laid down its frequently asked question in August 23. It has clearly explained that, any assurance provider that sells its products or offers any non-audit or non-assurance services to a listed entity or its group entities, irrespective of whether the nature or service is financial or non-financial, it will not be eligible to undertake assurance of BRSR code. So it's very important that independence requirements are met before we accept a particular engagement as part of assurance. Moving on to the next slide. Also, we need to spend some time on practitioners, experts. Now, this is an area, sustainability reporting is an area which requires expertise from various individuals, because it is not just dealing with financial reporting, it is dealing with other aspects of business, like, how are we impacting our environment, how are we impacting social aspects, and how are we affecting the governance aspect, the E, S, and G, which are basically laid down in the BRSR main principles. And for that, as per SSA 3000, we need to spend some time on this aspect. Again, it will be a responsibility of the practitioner to evaluate. While they use experts, they have to basically check their competence, capability, and objectivity. They will also have to check their independence in this. They will have to spend time to understand the nature and scope of the work that expert would do, and also the adequacy of the work that they are finally given become part of the report. It will be the responsibility of the practitioner to take, basically evaluate and professional skepticism applied to it when they are doing this, using the work of an expert. It is very similar to what we do in a financial statement audit when we use expert. For example, if there's an impairment, we use a valuer, an identified valuer. Management might be using an identified valuer, and we apply the same kind of professional skepticism in this area as well. Shweta ji, are there any questions still here that I need to look at?
Yes, ma'am. I'm sharing.
Yeah, miscellaneous A40A internal correspondence वो सारी ले आते हैं। A40A इसलिए practice होगा। A40A internal correspondence वाली तो है।
Ma'am, are you able to see the question?
Yeah. On the number of days account payable, there's one, and okay, I think there's a specific question on code. I will come back to it. But on the assurance provider is, for example, could be an audit firm, or also other very specialized companies who are giving assurance on this area. SEBI allows any kind of an assurance provider in this field which has the necessary expertise, who can do this job. Again, it is the responsibility of the board of the company to evaluate the competence of the provider that they hire, and they will have to see that that provider has adequate skill set. And while the provider has been accepted, we come to this slide, which is slide 10 here, where the practitioner has to evaluate his or her own team, including the experts as part of the team, that they all possess this right skill set to give the assurance report. Now, in the BRSR requirement, only for BRSR core, SEBI requires a reasonable assurance, for which they have laid down very elaborate criteria. I will come to it. You will just have to wait for 2-3 more minutes for me to show you. Can statutory auditors perform BRSR? Yes, they can, as long as they are meeting the strict requirement of independence, because what SEBI has laid down in its criteria is independence. It could be, while checking, more stricter than the Companies Act and also from ICAI guidelines. So it is very important that you do that assessment before you accept as statutory auditors the same role, and before a company gives it to their statutory auditors. So that's why I wanted to elaborate on SEBI's independence requirement. I think that's for this particular slide. So let me move on. Now I just want to spend 2-3 minutes on the terms of underlying subject matter, as I had highlighted in my earlier slide. So from BRSR core perspective, SEBI has already defined what is the underlying subject matter. For BRSR core, there are 9 parameters, and GHG, for example, would be the underlying subject matter on which an assurance provider would provide assurance. Similarly, water, waste, and other aspects. Moving on to the next slide. Now, what is the criteria? As I said, it is the basis of preparation for the information that is a preparer would do. So any company which is within 150 getting ready for assurance would have to prepare its information basis a particular reporting criteria. Now, on the left side of this slide, you can see that initially companies have used more than one criteria, and my colleagues who were presenting earlier, Ankit and CA Kuldeep, also kind of brought out an integration between integrated reporting and BRSR framework. So companies generally in India are using GRI, SASB, integrated reporting, and BRSR while they are issuing the reports under BRSR. And also SEBI in its framework allows a company to use various frameworks. So SEBI's in their guidance note and in their framework say that if a company is using more than one and reporting on more than what BRSR is mandating them to report, they could cross-refer it. So that has been the practice in over the last many years in this area. Okay, now let's just look at the subject matter information. So after we identify the underlying subject matter, for example, GHG, and then we know our reporting criteria is BRSR framework, then this is the way in which you would see in your report these parameters being reported, for each and every item, which will be in the detailed report. Moving on to the next slide. Yeah. So now I would like to, I think we only have 10 minutes, Shweta ji. Is that okay to continue? I will try and finish this quickly. So these are the 9 metrics that we have. GHG, water footprint, energy footprint, circularity. Well-being was always there as part of the, BRSR framework. Gender diversity was also there. Inclusive environment is more for relating party transactions and fairness of business. The last 5 of them are more closely related to financial statements. And that's why I would like to spend more time on GHG, water footprint, energy, and circularity topics today. So let's just move on to the next slide. Now, looking at the GHG gas, as you can see, this is the parameter which is laid down in BRSR core, which requires various parameters and assurance parameters for scope 1 and scope 2 emissions and what kind of information they want. So looking at, how we would apply the steps of assurance in this area. So I think the step 1, as CA Ankit and CA Kuldeep mentioned, we have to define the organizational boundary. Now, BRSR defines operational boundary as the same as the financial statement boundary. So if a company, and it gives a choice to the company that if they want to do standalone, then they can do standalone. And if they want to do consolidated BRSR, they can do that. But the reporting boundary has to be the same as financial statement boundary. Now, applying it with various other frameworks, one would have to sit and define this more, spend some time on organizational boundary if you have more parameters to make sure that you are meeting the requirements of BRSR operational boundary. Then as a step 2, you would define what are the sources of emissions. 3 is you would calculate. 4 and 5 steps are not mentioned in the BRSR, but you will have to track and report emissions in this particular order. Moving on to the next slide. So just to give you as a pictorial, scope 1, in this one, on the left hand side column, you see which are the gases that BRSR core requires a company to track. And then there's something called scope 1 and scope 2 and scope 3. Now, as per the GHG protocol, scope 1 is defined as those emissions which are from the controlled resources of a company within their operational or a reporting boundary. So if we are saying that we will look at the standalone financial statements and standalone financial reporting boundary, and let's assume it's the hotel industry, then the hotel which is owned, the building which is owned, then GHG emissions of that building, along with if they have vehicles which are owned by them, the direct emissions would form a part of your GHG emissions. Scope 2 emissions are what you purchase in energy. So these are indirect emissions like your electricity bill, steam, heating, cooling, etc. would be part of your scope 2. Scope 3 are not mandated in BRSR and a company could give voluntarily. And these could be anything that is beyond scope 1 and scope 2, like your travel expenses, your leased assets, your transportation that you have leased. All of those would be part of your scope 3 emissions. Moving on to the next slide. Sorry, let's just wait here. So when we are, go back please. Yeah, when we are on this particular slide, what we can see is what are the risks that we have when we are doing an assurance here. Number one risk could be, measurement methodology that has been selected is not in accordance with the reporting criteria. So you may, the company may have a different policy than what is mentioned in BRSR, for example. The second could be that entity has selected a boundary which is inappropriate. It is not looking at all the factories that it has and it is doing a cherry picking of its factories in its standalone financial statements. Third could be that sources are not completely identified. You may miss certain sources of scope 1 and scope 2. And lastly, there could be some non-compliance due to laws or regulations. For example, there could be particular state laws that you need to take care of as part of your operational boundaries. So these are some of the risk factors of assurance on which an auditor would work and ensure that all the information that is to be given is obtained. Moving on to the next slide. Now let's look at the water footprint. This is what BRSR report looks like. In BRSR core, these are what they are requesting us to give the information on. Moving on to the slide. So again, we will have to identify all sources of water. We will have to compute or monitor water withdrawal. I think there were some questions earlier regarding if your water bills are combined with your electricity bills or there are bills which are together with leased assets. I think what we will have to do is we will have to request for the information because that's very necessary to meet the requirements of BRSR core, or certain assumptions which are taken to know this information would also have to be then explained in this area. So as a step 3, you compute what is your water discharge. At step 4, you identify what is the consumption and then you compute water intensity. Moving on to the next slide. Then again, what we have to do is we have to understand what are our sources of water. As the slides explains, it's self-explanatory. We have surface water, groundwater. We could be purchasing water from municipality. A factory could be reusing seawater, and it could be other sources like bottled water, drinking water, etc. that are being used, or some recycled water. Many large corporates recycle their water in their washrooms. So it all becomes part of your sources of water. Again, we will do a risk assessment on these topics, and we will say that has the entity inappropriately recorded water consumption? Are there any errors in the computation of water intensity? Is there any discharge of water that has not been recorded? and whether all plants and locations discharging untreated waters are included in this disclosure, or there's some sources of data missing. So that's an important part of your risk assessment that you will undertake. Moving on to the next slide. So then we come to the energy footprint. Again, we have requirements from BRSR code. Moving on to the next slide. We again have the same steps. We identify energy sources, we identify consumption, and we calculate total energy and percentage of energy consumed from renewable sources. Moving on. Again, here, what are the sources of energy one company has to really spend time? Are they using non-renewable sources or renewable sources? And, all that data has to be there. And then again, the risk factors regarding energy would have to be understood. Like I said, is the consumption incorrectly recorded? Are the sources incorrectly identified? Are there incorrect approach in claiming or saving these energies? So that's an important aspect which an auditor would need to look at. Lastly, on circularity, again, this one is about waste management. I would highlight there again that you would have to look at the papers, like your operating licenses would, in many times in the companies, would say what kind of wastes are generated and what kind of waste need to be recycled. So those documents from the factories will be very important to do an assurance aspects in this area. Moving on to the next slide. Again, similar steps would have to be identified here. Lastly, there are various kinds of waste that CA Ankit and CA Kuldeep pointed out, and there are various laws in this area that are coming up. I can see Anuji coming on the camera indicating that it's time. I'll just take 2 more minutes. So after we have done the evaluation and audit of all the 9 parameters, it's important that we do completion and reporting. These are very similar to what we do in a financial statement audit. Of course, we look at misstatements. Documentation is a key. Everything should be documented as required by SQC1, and your files would need to be prepared. Subsequent events would have to be evaluated when we are giving an assurance report. As I said, it's similar to financial statement audit. And lastly, we will take a written representation, and assurance report would be issued in the way SSA 3000 also has a example report in it, which we can use. Moving on to the just final key takeaways is that please understand the business for which you are undertaking this requirement. Please perform all the specific procedures that are needed for an assurance. When you are taking an expert, make sure that they have the requisite skill set, and there's a need for robust documentation in this area. This brings me to an end to my presentation. I can take 1 or 2 questions. Pallavi ji, Shweta ji, if you think.
Sir, ma'am, is assurance required only for financial year 24 indicators or the last year as well?
So the assurance is mandatory.
Please exit screen sharing first.
Sorry, exit this.
Yes.
So I think here, because BRSR core parameters are new parameters, and the information, if a company has collected in the last year, they could go for a comparative year assurance as well. Otherwise, it will be only for the current year, because the information would not be available for a company. But a company with a large track records, and what we are seeing are top 150 companies in India. They may have this information and would like assurance for their comparative also. So SEBI doesn't, gives any mandate in that area.
Yes, ma'am. Next question, 1 more question is there. If you are expanding the boundary of reporting, can the reporting boundaries be different with the note?
So a very good question, actually, which we are also deliberating. So if we are opining on BRSR reporting, okay, Then the guidance note and BRSR report themselves, they say that the reporting boundary should be standalone or consolidated. But if a company is, as value chain will come in future and the company is already kind of including their value chain in their reporting, then they could use an additional column to explain that, because BRSR reporting should, in my view, in one column should be as per the BRSR format, and then for additional information they could include another column so that they are complying with, they are giving additional information which can be marked as voluntary for their larger pieces of value chain.
Thanks for addressing and have your enlightening words. And this session is so knowledgeable that our participants and all of us will get the knowledge of this assurance and BRSR reporting. Now, moving on to our concluding remarks. We would like to welcome our Vice Chairman, Sir, CA Anuj Goyal ji, to deliver a concluding remark for all of us. Thank you, sir. Over to you, sir.
Thank you, Sweta Goyal ji, our Honorable Secretary of this very, very important board of the ICI, Sustainability Reporting Standard Board. I am really grateful, really indebted to our all three resource persons, Ruchi ma'am and Ankit ji, as well as third speaker and Kuldeep ji. And I think all the delegates must be very happy the way all the speakers have, of course, justified with the topics given. And I'm quite confident that we will be getting their support in the times to come also. I'm really grateful to Pallavi Jain ji, very, very prominent chartered accountant from Prayagraj, and Harshit Birani ji, a very, very prominent chartered accountant from Rajasthan, Bhilwara, and of course all the participants who are with us from each and every part of the world for their presence and very, very active participation. Thank you very much, and we look forward for the more and more such type of virtual programs and webinars in the times to come. Thank you very much.
Thank you, sir. Thanks a lot. Pallavi ma'am, give the vote of thanks, please.
Thank you, ma'am. Thank you, Ruchi ma'am, for your such wonderful experience, for sharing your wonderful experience with us. I'm definitely, we are very sure that all speakers have contributed, and we will definitely benefit from that. Thank you, ma'am. Thank you so much. Thank you, Anuj sir, for being with us during this whole session. Thank you, sir.
Thank you very much. Thank you very much.
Thank you, ma'am. Thank you, sir. Thank you, everyone.
Thank you so much.
Thank you very much for giving the opportunity. Thank you.
Thanks a lot.
Thank you very much. Thank you.